SA 800, which is, you already know, special considerations, audit of financial statements prepared in accordance with special purpose financial reporting framework. You already know difference between special purpose financial reporting framework and general purpose financial reporting framework. Okay, examples of general purpose financial reporting framework: Indian accounting standards, IFRS. These are examples of financial reporting frameworks which are general purpose. Okay, they are used for you know, general users. They will be used by general users. Hope that is clear. Now, what is a special purpose framework? We already discussed this. Financial reporting framework designed to meet financial information needs of specific users. In the example that I have discussed with you, bank, right? And it can be fair presentation or compliance framework. Difference between fair presentation framework and compliance framework we have already discussed in starting standards itself. Some of the examples of this special purpose framework: first example, cash basis of accounting and also cash flow information that an entity may be requested to prepare for creditors. Now there was an amendment in this point. Okay, this point is amended point only. Okay, I have included amended point only here, but earlier, see, there is no change in the concept, but the terminology has been changed. Earlier this example was here, now it is cash basis of accounting, right? Earlier a different terminology was used. Okay, the meaning is same, but the term used was different. That's it. Okay, that small minor amendment was made in this point. Okay, next example, financial reporting provisions established by regulator to meet requirements of that particular regulator. Okay, if any particular regulator, let's say for example income tax department, in future it might issue a financial reporting framework and ask the companies to prepare financials as per that particular framework when they are submitting financials to the income tax department. So that becomes a special purpose financial reporting framework. See, that requirement is not there as of now, but I'm just giving you an example. Okay, next, financial reporting provisions of a contract such as bond, indenture. Now let's say company wanted to raise money from public, IPO. Now in order to raise money from public, or let's take another example, company entered into a contract with government. Okay, government wanted to construct a particular bridge or particular dam. So for that particular purpose, government issued tenders and the company participated in the tender and the company won the contract. But in order to give that contract to the company during the period of construction, okay, let's say construction of dam takes 5 years. So during that 5 years period, company has to prepare its financial statements as per the financial reporting framework that is specified in the contract between government and the company, and submit it to the government. Why? In order to assess the financial stability of the company, government has kept this requirement. Okay, because construction of dam is a huge project, lot of money is involved. Now whether company is in a position to handle that huge project, okay, whether the financials of the company can support that project. So in order to assess this, the government wanted the financials of the company in a different format. Okay, that is easy for analysis of this point. So the government has designed its own framework and it has kept that framework in the contract between company and government, right? So this is also one of the example for special purpose financial reporting framework. See, wantedly I'm going a little slow because there is an amendment in this standard. Okay, next, considerations when accepting such a framework. Now I have told you now these standards, they are divided into three parts. The first part is considerations while accepting this engagement. While you accept the engagement, what considerations you have to take into account, okay, with respect to the financial reporting framework. So that depends on who prepared these financial reporting framework? Let's say the financial reporting framework has been prepared by a standard setting body. Okay, see, financial reporting framework developed by organization that is authorized to formulate standards for special purpose financial statements. Let's take for example ICAI. Okay, ICAI is a authorized organization to develop and issue standards on accounting and auditing, right? So if the framework, the special purpose framework is developed by ICAI, in such a situation, such framework will be acceptable to the auditor if the procedure followed and established is a transparent process. Okay, presumed to be acceptable if organization follows established and transparent process for developing that particular framework. Okay, next, if the financial reporting framework is prescribed by any law or regulation, in such a situation also the framework will be acceptable to the auditor until and unless there is anything contrary. Okay, see, presumed to be acceptable in absence of indications of contrary. Okay, until and unless there is any point because of which auditor cannot accept the engagement, cannot accept the framework. In all other situations the framework will be deemed to be acceptable to the auditor if it is prescribed by law or regulation. Next, financial reporting framework as per a contract. In such a situation, that financial reporting framework will be acceptable if it contains attributes as per the requirement of SA 210, that is agreeing to the terms of audit engagement. Okay, so this is how auditor will determine the acceptability of the framework. There is no amendment in these points. Okay, all these points are present earlier also. Now the amendment comes in the next concept, which is considerations in planning the audit of special purpose financial statements. Let us see. If you see, all these 5 points, they are as it is, they are not amended, but the 6th point is added. We will see that. First of all, we will see these points. So while planning the audit of special purpose financial statements, what considerations has to be taken into account by the auditor? See, you need to comply with ethical requirements, 5 ethical requirements, comply with the requirements of relevant standards. Okay, along with this standard you should also comply with the requirement of all other relevant standards. Example, special consideration in respect of some of the standards are: first one, determine materiality as per SA 320 irrespective of agreed threshold. Agreed threshold means now the financial statements are prepared by management and they are prepared for specific use of the user. Specific user, let's say that specific user is bank. Now management has entered into an agreement with the bank that in these special purpose financial statements management will not correct the misstatements until and unless those misstatements cross a particular threshold. Now that threshold which is agreed between management and bank need not be the materiality level. Okay, auditor, he should again determine the materiality level irrespective of the threshold accepted between management and that particular specific user. Okay, auditor, he needs to again determine materiality as per SA 320. Hope this is clear. Next, auditor should also determine those charged with governance responsible for special purpose financial statements as per SA 260. See, the people, those charged with governance for general purpose financial statements can be different from those charged with governance for special purpose financial statements. So the auditor, while auditing special purpose financial statements, he has to determine those charged with governance for special purpose financial statements. Okay, see, these are the requirements of other standards that needs to be applied while conducting audit of special purpose financial statements. Next, this is newly added point. Okay, you should also obtain understanding of any significant interpretations of the contract that management made in the preparation of financial statements. Now I have given an example. The financial reporting framework, the special purpose financial reporting framework can be prescribed as per a contract. The example that I have given is contract between company and the government. Now the auditor, before auditing those special purpose financial statements, he should first of all understand the requirements of the contract. Okay, generally as per SA 315, before you conduct an audit, you will assess the risk of material misstatement by understanding the entity and its environment. Just like that, here also you should understand the requirements of the contract. Okay, now here you can find obtain understanding of significant interpretations. Okay, interpretation means analysis of different points that are present in the contract. Right, there will be various points in the contract. So how you analyze and how you understand those points is known as interpretation. Now what will be known as significant interpretation? See, auditor, he needs to understand only significant interpretation. Now what is a significant interpretation? The definition is given. Note, an interpretation is significant when adoption of other interpretation would make material difference in the information presented in the financial statements. See, what will be a significant interpretation? Let's say there is a particular point in the contract. Now if you understand this point in one particular way, then you will arrive at amount of some 50 lakh in the financial statement for a particular item. If you interpret this point in another way, you will arrive the same amount at 30 lakhs only. Now if you see, because of change in the interpretation, there is a material difference in the way in which you will determine the amount or the way in which you will present in the financial statements. So this is known as a significant interpretation if it affects the way in which it is presented or amount disclosed in the financial statement. Okay, see, I'll again read this point. An interpretation is significant when adoption of other interpretation would make a material difference in information presented in the financial statements. Hope that is clear. So this point is newly added point. This is amendment, you can say. Next, description of applicable financial reporting framework. Here also amendment is there. Let's see, the first 2 points, they were there earlier also. Point 3, point 4, point 5, these 3 points are newly added. Let us see, description of applicable financial reporting framework. Where will you describe applicable financial reporting framework? You will describe applicable financial reporting framework in the auditor's report. See, auditor's report shall also describe the purpose for which the financial statements are prepared, and if management has choice of financial reporting framework, explanation of management responsibility shall also make reference to responsibility for determining that applicable financial reporting framework. If management is having option to select more than one financial reporting framework, okay, it is having choice to select the financial reporting framework, then auditor in his audit report under management responsibility, he should clearly mention that it is the responsibility of management to select the applicable financial reporting framework. Okay, these 2 points, they are there earlier also. Next, if auditor wants to give any key audit matter in his audit report on special purpose financial statements, then requirement of SA 701 will be applicable. Now it doesn't mean that earlier, before amendment, the requirement of SA 701 was not applicable. Earlier also SA 701 is applicable for audit of special purpose financial statements, but now specifically this point is introduced in the standard. Okay, there is no change in the interpretation or no change in the applicability of SA 701, but it is explicitly mentioned now in the standard regarding applicability of SA 701. Same with respect to SA 720 also. Now if the special purpose financial statements are given along with a report, okay, generally the normal financial statements, they will be issued to the public by the company in the annual report. Right, in the annual report there will be board's report, there will be management report, there will be various analysis, right, all will be included. Now with respect to that other information, Basically, in the annual report, apart from financial statements and audit report, whatever the information is present, that information will be known as other information, and auditor, he needs to verify whether that other information is consistent with the financial statement. Right now, the same thing will apply here also. If management issues special purpose financial statements in a specific report, then that report will be known as annual report for the purpose of this standard, and the auditor, he needs to verify whether that other information is consistent with the financial statements. So here SA 720 will be applicable even with respect to this financial statements prepared as per special purpose financial reporting framework. Okay, next, audit report on special purpose financial statements may refer to audit report on general purpose financial statements in other matter paragraph. See, if auditor of special purpose financial statements in his audit report wants to refer the audit report of general purpose financial statements, then the auditor of special purpose financial statements can do so in the other matter paragraph in his audit report. Hope this is clear. So these 3 points are newly added as amendment. Next, alerting the users. Now, in the alerting the users, a small change has been made. Generally, special purpose financial statements are used only for specific uses of specified users, right? All the users cannot use. Now, there is a chance that the entity might publish these special purpose financial statements and audit report in the website. Now, the users might confuse, might misunderstand these audit report on special purpose financial statements. So, in order to avoid misunderstanding, the auditor in his audit report, under emphasis of matter paragraph, he will clearly mention that this audit report is on special purpose financial statements. This is not for the use of general users. Like this, auditor will alert in his audit report. Okay, where will he give this alert? He will give this alert in emphasis of matter paragraph. Now, what is amendment here? Earlier, before amendment, auditor used to give this point in a separate paragraph by heading alert to the users. But now that alert to the users paragraph is removed, and this alert is being given in the emphasis of matter paragraph itself. Hope this is clear. Next, auditor can extend this paragraph to restrict the users. See, additionally, same paragraph can be expanded to restrict distribution or use of auditor's report. Okay, in the same paragraph, auditor can mention that this audit report has to be distributed by the management only to specific users. Okay, like bank or the other party of the contract. Okay, as per the circumstances, who is the specific user will be determined by the auditor, and he needs to restrict the distribution of this report only to that particular specific users. Hope that is clear. So by this, we have completed revision of SA 800.